Creamer Media's Mining Weekly Online is talking to Deshni Naidu, the CEO of Zinc International, a subsidiary of Vedanta Limited. Can you tell us what you've done on the ground now?
We've moved 11 million tons. We have over 300 contractors on site in order to do that. We are days away from starting the mobilization on both the bulk mining contractor as well as the plant and infrastructure EPC. This is a zinc mine that we'll take out 4 million tons from an open pit, and we will put it through a plant where we will produce 250,000 tons of metal in concentrate. Some of that metal in concentrate, the higher manganese fraction, will be trucked down to our Scorpion operation in Namibia so that the manganese can be removed. Because the Scorpion operation was an oxide mine only. The Gamsberg mine is a sulfide mine. So we've had to change the front end of the Scorpion plant to co-treat sulfides and oxides in order to be, for us to take out this manganese. I think that is the game changer. The other game changer is that, Anglo always envisaged a mega project, so like a 10 million ton run-of mine, 450,000 tons of metal in concentrate, which would have likely been, you had to have refined it on site, because from a logistics point of view, you wouldn't be able to move those tonnages. We are doing this modular. 4 million tons, 250 phase one, and then we'll ramp it up thereafter. So I think from the Scorpion issue as well as the modular approach in mining is why we've made this project work now.
And how much have you spent and how much do you envisage spending?
Phase one. When you first met me, we spoke about a $600 million project to build the mine as well as the plant. We've actually shaved off close to $200 million of that price tag. And the way we've been able to do that is the project was initially going to be kind of an owner mined. I think given, ramp up issues, skills issues, etc., we could do it, but I didn't want to jeopardize the timeline. So we're going to go contract mining. So contract mining, as you know, is not as capital intensive up front because we won't have to buy our own fleet. In addition, the team has re-looked at, the water lines to the power lines. And from re-engineering, redesigning, and better negotiations on contracts, we managed to shave off $200 million. In addition to that, the positive news is that more than 80% of that will be ZAR money, because we'll be able to procure equipment, and I can't tell you who just yet because we're in the final stages of that negotiation, but all our equipment's coming from South Africa. And obviously the contractor is a local contractor, so ZAR based as well.
Vedanta is a company listed on the London Stock Exchange. Is that a centre of capital raising for you, or will you be raising most of your capital in South Africa?
I think most of Zinc International's capital for projects will be raised through South African banks as well as some of the Vedanta International relationship banks. Last year this time, debt markets were completely closed. No one wanted to talk to us. This year I'm seeing a big difference, but also I'm seeing a big difference for zinc projects. I think whereas last year I was looking at innovative solutions around DFIs, ECAs, etc., now banks should be able to give us the debt quantum that we need. Gamsberg reserve and resources are over 200 million tons. Okay, phase one, there's 250,000 tons for the next 12 years, only exploits 50 million tons of that. So there's an opportunity to not just double this, possibly, even go 3 times over the next 10 years. We are setting ourselves up for success because we're going to use the revenue that we generate from phase one to build what will be a very capital intensive phase two.
What is the capital likely to be for this bigger picture now?
Phase one, 400 million. To take the pit to 10 million tons and to basically double up the plant capacity, or just more than double up the plant capacity, we're looking at maybe another $350 million. We're looking at maybe 350 megawatts for a refinery like this. And we're looking at nothing less than $500-600 million for this refinery. We're pretty bullish about the geography, and people keep on asking us why, because we have a track record. I think once we develop phase one, once we understand some of the manganese challenges, as you said, once we start generating revenue, it doesn't scare us to then go and invest in a refinery of this size to deliver into the country's beneficiation strategy. But I think this phased approach actually gives us a way of de-risking it.
Can you take us through that payback?
The project that we currently have, more than hurdles for us, and has got a reasonable payback, so less than 3 years. If prices carry on at these levels, which is significantly higher than price assumptions that we have for our internal valuation, all it does for me is it actually makes phase 2 decision a lot sooner. We're pretty bullish about zinc. And if I look at the fact that zinc was one of the last base metals to fall, the first base metals to recover this year, over 60% appreciation in price, and unlike other commodities where people are waiting for demand to grow, zinc is bullish because supply is coming off, as you saw with our Lachine mine in Ireland last year. So I'm confident that the fundamentals in terms of price will be there over the next 3-4 years when we need to make key decisions on the next steps involving phase 2, particularly linked to the refinery. The exciting thing about zinc, as I said, it is structurally short today. I think last year I was telling you about a deficit that's going to happen. This year I can tell you we are firmly in it. One of the sure ways of looking at deficits outside of looking at declared LME stocks is actually looking at the treatment charges that basically smelters are charging concentrators right now. So typically a TC is around maybe 10 to 11% of the current spot. So spot at the moment is around $2,200 per ton. It went up to $2,300 last month. So typically your TC should be over $220 per ton. We are seeing TCs today of under $90 per ton. So it's very much the kind of the producers or the concentrate suppliers market. So that tells you that the situation is here to stay. Zinc is also one of the more unloved commodities, if I have to say it that way, because the majors have not heavily invested in this. Unlike some of the other pipelines we see on copper and iron ore still, there aren't that many zinc projects either being executed or in its feasibility stages. So I'm confident that the Gamsberg project will be one of the first projects to market from a greenfields point of view, and I think that's what makes us quite excited. There are other projects, but if you look at volume, no one has the volume. The other bigger project is MMG's Dougal River in Queensland, and they're about 180,000 tons of metal in concentrate. We've got 250. I see lots of other projects popping up every now and then in terms of brownfields, but no one's got more than 50,000-60,000 tons of MIC. So this bodes well. You are structurally short today. There aren't that many projects in the pipeline, and supply is coming off because the mines have run out of life, which is what's happening in China as well. So I think the fundamentals are pretty sound. We want to create one of the biggest zinc complexes between Akenes in the Northern Cape as well as Rosh Pina in Namibia. Zinc for Vedanta is produced out of India, in the capital of Rajasthan. We have a capacity of over 1 million tons of metal. Before Lachine closed, Zinc International, our business, had a capacity of over 400,000 tons. And to put that into context, the current global demand or consumption is around 13 million tons. So we're a pretty significant player. India, I think we've invested over $3 billion in projects in India in the short term on zinc, and then we started our projection in South Africa. So I think the vision is very much how much can we grow based on the reserve and resources that we have in the ground. Despite the downturn, we never stopped our exploration plans. I think, and that's what's been key. So this year, as an example, when we saw prices starting to pick up, I was very quickly able to tell our head of exploration to double his budget. We continue to explore around the old Black Mountain that I think a lot of people thought had very little life. And we are quite bullish about the lead prospects there. So, our vision is that we'll create Gamsberg as a global zinc complex, and then Black Mountain will become a leading lead producer. So on a zinc equivalent basis, we'll be quite a force to be reckoned with.
That was Creamer Media's Mining Weekly Online, talking to Deshni Naidu, the CEO of Zinc International, a subsidiary of Vedanta Limited.